Hello, everyone. I'm Matt Clark, research analyst for Money and Markets with your latest Bull and the Bear podcast. Just a reminder, if you do have a question or a particular stock or sector that you'd like us to cover, you can do so by emailing us at thebullandbear@moneyandmarkets.com. We'd love to hear what you have to say. Now let me get on with today's podcast, kind of in a quick fashion, if you will. Now I'm kind of a data geek. I kind of started when I was a sports reporter in high school. I used to spend just countless hours poring over stats for any sport I could find, anything from football to soccer to baseball to softball. It didn't matter. I always looked at line scores and stats. And as my journalism career grew, my love for stats kind of grew with it. I use stats all the time to tell stories because it was easy for sports. That's because they are the story. I mean, you have little nuances that are rationales for the stats, but the stats are always the pure form of what the story is for any sports story. And it really kind of worked the same when I became an investigative journalist. You know, you pour over records and data and spreadsheets and any kind of data points. And if you know what you're looking for or have an understanding of what you're looking at, then you have a good basis for what your story is going to be, because the data doesn't really lie. And in the financial world, data is a big part of what we do. We study it and we form conclusions based on what that data tells us. Data could suggest an uptrend. It can be confirmed by other points of data. Data could suggest a downtrend, and other points of data could confirm that. So, the data works in all kinds of ways. And that leads me to two stocks I want to talk about today in particular. And these are two stocks that I've recommended in the past, back during the height of the coronavirus crash. And they've made headlines recently. The first one is Nvidia Corporation. It trades on the NASDAQ under NVDA. It's a company that specializes in developing graphics processing units that process large amounts of data in a very cost-effective manner. On March 31st, I recommended Nvidia as one of 3 stocks to buy after the coronavirus crash. These were stocks that I fully expected to maintain their upward momentum in the stock market. And they didn't disappoint. In the case of Nvidia, if you bought with my recommendation, you'd see nearly a 50% gain in a short amount of time. The company recently made news when it decided to purchase semiconductor giant ARM Limited from Japanese bank SoftBank for $40 billion in cash and stock. It's considered one of the largest, if not the largest, semiconductor acquisition in history. The deal positions Nvidia to be an even bigger player in the semiconductor space than it was before. Now, the second company I want to talk about is cloud computing giant Oracle Corporation. It trades on the New York Stock Exchange under ORCL. I recommended this as a buy a few days after I recommended Nvidia back on April 2nd as one of 3 cloud computing stocks to buy. And like Nvidia, this position has not disappointed. If you bought Oracle when I made the recommendation, you'd be looking at a 20% gain, if not just a little bit more, in relative short order. Now, the company's also been in the news lately, as it was reported that it is going to become a minority shareholder for ByteDance's popular social media platform, TikTok. Now, if you're not familiar with TikTok, it's probably because you're over the age of 18. It's a social media video platform that's geared more towards teenagers. It's become very popular, but it's come under fire lately because the Trump administration is kind of taking aim at some of these Chinese companies because they fear that the data collected by apps like TikTok and things like that can be used nefariously by the Chinese government. Is there any evidence of that? Not really, but it's there, and so the Trump administration put a kind of a moratorium on ByteDance and TikTok that they needed to be sold or else be banned from the United States. Now, TikTok has already been banned in India. So what TikTok and ByteDance did is they started entertaining suitors. The first big player was Microsoft. Microsoft suggested it was very interested in buying TikTok and making it a US-based company. And then Oracle came into the picture very, very late. Well, a few days ago, TikTok, or ByteDance rather, completely ruled out any type of a merger with Microsoft. There really wasn't any reasoning as to why. It could have been price, it could have been structure, it could have been any number of things. Well, then just a few days later, earlier this week, it was announced that ByteDance will now allow Oracle to essentially become a minority shareholder in the company and then bring its U.S. operations into the United States, where all the data will be stored on Oracle servers in the U.S. So there's really, it in theory, eliminates any threat of any government like the Chinese government using data collected by TikTok, which is basically the data of a lot of teenagers, to be used nefariously for spying purposes and things like that. Now, At the time, in late March, early April, both Nvidia and Oracle seemed like great buys. I looked at them and I saw their charts. They were both trending very well. Nvidia was already starting an uptrend after the coronavirus crash. Its 50-day moving average had already inched above the 200-day moving average, which suggested an uptrend was in the making. The same was true for Oracle. It was basically moving up. Its technical indicators reinforced the uptrend. So at the time, the picks were good decisions. Now, looking at the data, it tells a bit of a different story. And what I do is I turn to Adam O'Dell's Green Zone ranking system to tell that story. If you look at Nvidia, when I looked at this data just a day or so ago, the Nvidia, and these ratings change on a daily basis for now, the stock ranks a 68 overall. Now remember, Adam's system ranges from 0 to 100, and they use 6 different metrics to determine that ranking, and each one of those metrics also gets a ranking. So you basically take 6 rankings, and then you compile them together, and the algorithm builds one overall ranking, which suggests kind of what we feel like the position will do. Now, a ranking of 68 means that we're bullish on the stock, but it's not that bullish. You want to look at stocks that are scoring 75, 80, or higher in order to suggest a real strong bullish sentiment. Now, Nvidia scores very low in size. In fact, it scores a 0 because it's a very, very big company and has become even larger with the acquisition of ARM. It also scores very low in value because it's become extremely overpriced. It's important to understand that stocks with very high valuations do tend to produce very weak and sometimes even negative forward returns for investors. Now, the data tells kind of the same story with Oracle now. Overall, using Adam's system, the company ranks a 70. Again, it means we're bullish, but we're not that bullish. It ranks a 1 in size, so it's just actually 1 above Nvidia in terms of size. Meaning, again, it's a very, very big company. It also ranks very low in value, it scores a 44, and in growth, it scores a 59. Again, these scores are ranging from 1 to 100, 100 being the best, 0 being the worst. So it's right there in the middle. It's not very strong in either direction. It's not to say that these are bad companies, but it does emphasize the need for investors to really pay attention to data. You've got to look beyond prices and see just what the data tells you. You've also got to look past the noise that are created by daily news headlines. I realize that the stock market will move up or down based on a headline. That's just given. In a 24-hour news cycle, that is just bound to happen. However, if you're looking for long-term gains, if you're looking for long-term momentum, the data is where the story is told. In the case of Nvidia and Oracle, the data could suggest a slowdown in their uptrend. They both may go up a little bit more, but it's not likely they'll go up as fast as they did immediately after the coronavirus crash. Now, the data also suggests that both companies will outperform the market by about 2 times over the next 12 months. But the market is all overvalued right now. There's you see that everywhere. By and large, most stocks are overpriced. So the outperformance may not necessarily be what it was over the last 7 months when the market wasn't overvalued. The point here is to make sure that you take your time and you look to people like Adam or to Charles Sizemore or even to myself to research and find those real good best bets for your investment. And make sure you check out our YouTube channel. Just head over to YouTube, youtube.com. Make sure you search Money in Markets. We'll have the little green logo. And be sure to subscribe so you can get notified every time that we post a new video. If you want to listen to The Bull and the Bear, you can do so on your favorite podcast syndicator like Apple Podcasts, Google Podcasts, Spotify, iHeartRadio, even Amazon here in the immediate future. Make sure you subscribe there and get alerted. And what you need to do if you're on YouTube is there'll be a little notification bell that'll pop up after you subscribe. If you click that notification bell, that will alert you every time that we release a new video. Also, whenever we put out new videos, a lot of times we do what we call premiering. Now, what premiering does is allow it to go basically live and brings up a little chat function so you can get a chat alongside. And you can, if you're getting notified, then you can also get reminded whenever our new video pops up and is about to go live. So it gives you kind of that extra step in terms of getting that information first and faster. Also, leave us a review or leave us a comment on any of these platforms, whether it be on a podcast platform or on our YouTube channel. We love to hear what you have to say. If you have a question or particular stock that you'd like us to look at, just email us. It's thebullandbear@moneyandmarkets.com. We love to read your comments and respond to those as well. Do so as often as we can. Now, coming up on Friday, Money and Markets Chief Investment Strategist Adam O'Dell will join me along with contributor Charles Sizemore. We're going to talk about a couple stocks, let you know whether they are good buys or maybe ones you should stay away from. So you want to make sure you stay tuned for that coming up this weekend. Also, we've got the Money Markets Week Ahead and the Marijuana Market Update will also be coming out this week as well. So make sure you stay tuned to our YouTube channel and you'll be alerted whenever those come out. So That's about all for me for this edition of the Bull and the Bear. So until then, I am a money market research analyst and host of the Bull and the Bear, Matt Clark, wishing you safe trading.